So I believe recording has started. So we'll go ahead and get started. July 27th right now. Once again, great to see everyone. We'll kind of walk through. I have 3 or 4 points to discuss today. And as we progress through, as I mentioned earlier, please send notices in on the chat if you have any questions as we walk our way through. Let me minimize one screen here. We'll go ahead and share my screen and get our meeting going here. I'll share with you guys one of my favorite parts of the day is actually checking out the data first thing in the morning, and I'll show you what I like to take a peek at. First 30 to 45 minutes of any given day can be pretty rewarding to me. I just enjoy walking through the numbers, and you'll have to bear with me as I admit some people coming into the meeting here. And I'll show you what I tend to look at when I'm looking at the data in the morning. If you've spent any time with market structure, we use the kind of the acronym BCD. B stands for broad market sentiment. So what we want to look at is what's happening from a big picture perspective. And this is how I got here, just by the way, for those who are new. You can just go up here to broad market sentiment. You can click on that, and you can actually change the date. Right now, this is a 3-month default, as you see. Looks like we have a couple more people coming in. All right, so it looks like they have been coming into the meeting, which is good. So 3-month default, and what we're looking for, what's happening right now, big picture perspective. Right here is demand in the marketplace, and you can see that we're slowly starting to roll over from a demand perspective. When I say roll over, it means that demand is slowly starting to go lower. Now look at what's happening to short volume. So demand in the marketplace starting to decline a little bit. Short volume or supply in the marketplace starting to move higher. So instead of what we call divergence, we're getting convergence. They're going the opposite direction of what we would like to see. What I will sometimes like to do, and I'll show you how I get here, just click up here on the date, and you can change these parameters. So let's take it back 6 months and see if anything changes. Well, you can see on a 6-month basis, green here, broad market sentiment, we've been staying, let's say, 4 or higher for the longest time. That partially explains why we've had this tremendous run in the broad market. Now look at what's happening with short volumes. Short volumes have stayed extremely low, really for about a month and a half. So we've had, you could argue that we've had a little bit of a short covering rally over the course of the last 6 to 7 weeks, which also partially explains this movement higher. So we've had strong demand, and for the most part, we've had short volumes that are trending. You can see they're trending below that trend line. It's good news. Well, notice what's happening to short volume now. This is a 6-month look. It's sneaking above that trend line, isn't it? Demand is starting to roll over. Short volumes are starting to move higher, whether you look at it on a 3-month look or a 6-month look. If we take it back a little bit longer, that supply look probably is okay. You can see it's still okay from a 1-year look, but anything on a short-term basis, well, there's some issues right now. So that's broad market sentiment. Let me see if I'm missing anyone coming into the call. Got 2 more people coming in. Apologies there. So that's our broad market sentiment. The context for the market right now, well, we're coming up on month end. Coming up on the month end time frame, and I'll switch over to kind of a big picture look at what's been going on in the market here for just a moment. Make sure I have the right look up. So you guys have probably heard over the course, in what you're looking at right now, S&P 500, this is a 1-month chart. S&P 500 is here in dark blue. NASDAQ is in purple. The Dow is in light blue. So you've heard about the Dow moving higher, what is it, 13, 14 days in a row. That's been all over the press. Yes, a very historic run. But sometimes it's important to recognize the context of what's happening in the market. Let's pull this look back on a 3-month basis and look where the Dow is. So we've had this tremendous run. NASDAQ streaking higher. Recognize a lot of that is from some of the mega cap stocks, the Magnificent Seven, the FANG stocks, whatever you want to call them. S&P 500, certainly stellar returns. I'll explain the pink here in just a moment. That's the financials. And the light blue is once again the Dow. So take a look at the context of the market. To a certain extent here over the last couple of weeks, the Dow has been playing some catch up. But if you pull that lens back a little bit farther, you can see that there's a reason that they're playing catch up. They've been way behind. So context of the market right now, context of what's been happening with the Dow right now. Let me get to my first point, and before I do that, let me see if there's any questions coming in. If I have anyone else to admit, I do. All right, so hopefully everyone's in the meeting and can see my screen okay. So context of the market. My first point today was to be patient. What I wrote down is that sometimes no trade is better than forcing a trade. And I've had to remind myself of this a couple of times during the last few days. You can see that let's pull this lens back to a 1-month lens. You can see that the market's just been on a tear on a 1-month basis. Well, when the market is ripping higher, it's hard to buy stocks at a discount, right? Hard to buy stocks when pricing is at to your advantage. So I've had to remind myself of that notion that sometimes it's better to just be patient. And I similar to many of you guys, I have a long only portfolio, more of a long-term portfolio. And on those days, I'm like, okay, well, I'll hang on to my long only portfolio, enjoy those profits. Maybe I'm not seeing profits on my daily trading, but that's okay than forcing a trade that might not work. The second point I wanted to make today, and this is kind of a big picture concept in terms of edge and what we're doing here, and just where we're going as a company. I've been working alongside Tim for 8 years, most of it on the other side of the business, which for some of you who are new, that's our IR business, so investor relations business. And in terms of what Edge is doing, we're working through some testing right now. I think Tim mentioned this to you guys a few days ago or a couple weeks ago, that we're testing a long only portfolio. The parameters, and there's different parameters that Tim is testing. One of them being sentiment that is moving higher than 9 for individual portfolios, short volumes moving lower than 50%. And then that last part of it is broad market sentiment being above 5. So that was the parameters for this test security. And Tim would have it in play for a period of time. And it was, beating the market by, 1,000 basis points, 1,500 basis points, very substantial. Now, we'll never give that to you guys until we make sure that we've back tested it sufficiently. But here's my point. Think about a portfolio that you could do where you have a long only portfolio as part of your money. And then think about a portfolio where you perhaps are able to trade daily names similar to what many of you are doing. You could be making money on both sides of that equation. Now, I just share that with you because that's something that perhaps I envision for the future. It's something that I, personally would like to do. I use Edge every single day. It's the first thing I do every day. I come over, I take a look at our momentum portfolios. I come over and I'll show you, I have a lot of different test portfolios, but the ones that I mainly trade out of, well, that would be momentum and that would be low volatility, similar to many of you. It's what we see or what we try to talk about in our emails every day. And just for just an explanation of how I go about my day, and many of you do things a little bit differently, but just a way of sharing what I do. What I will do is I will put all of those names just in a portfolio. This is just Yahoo Finance. There's a million different ways you can do it. So you can see, here is our momentum names over on the top of my screen. And as I go down, we get into the low volatility names moving farther down. And what I will generally do is I won't look at these every single second of the day. That's impossible. And to be honest, it's not very productive. What I'll try to do, maybe every 20 or 30 minutes, glance at the screen, what's going on. I'm doing other work during the day, just like you guys are. And I'll see, what's moving today. Are there possibilities for trades? So that's how I kind of orient my my daily day. All right. Do we have any questions? The first part here, where I mentioned about being patient. Sometimes no trade is better than forcing a trade, and I mentioned that big picture perspective. Where I potentially see Edge going down the road. Any questions that I can address right now? And I showed you that Dow Jones rally. What's happening there? All right. Sure. Question in regards to how demand is calculated. Thank you. That's a terrific question. Think about it in terms of a weighted index. So there's 4 behaviors in the marketplace, and each one's going to have an impact on pricing. And we look at it on a week over week basis. And when you look at the S&P 500 and you're looking at that demand calculation, obviously it's covering all 500 companies. So the way that you can think about it, fast trading, maybe in a given security is 55% of their trading, active money might be 10%, passive money 20%, and so forth. And they would get a weighting then going forward. So fast trading would get a 55% weighting, passive money 20%. And when you do those calculations, that's where the demand comes from itself. Hopefully that makes sense. So think of it as a weighted index, looking at the impact from all 4 behaviors over time. All right, might consider individual sector and, pull up here. Individual sector and supply and demand when looking at the low volatility and momentum portfolios. That's a great question, and that's a good opportunity as well for me to perhaps have a learning moment here for a second. So on your, each one of you guys will have the sector look. So communication services being an example, consumer discretionary, and so forth. What I have done as well, and I think many of you do this, is I take it and I'll give you an example with communication services. So this is the largest by market cap. I will just dump all of the communication services into a portfolio, and then I'll pull out roughly the 10 largest names. I just kind of look at market cap, where's a convenient cutoff point. The reason that I show you this, and it's part of the reason that I brought up the financials earlier on my chart. Take a look at what's happening. Sorry, it wasn't the financials, it was healthcare. I was looking at a name right before the call. So here's all of the healthcare names, right? You can see that sentiment is slowly starting to retreat. Short volume staying below trend. But look at what's happening when we look at the big guys and recognize that a lot of times the big players will move first, whether that's for gains in the marketplace or sometimes for profit taking. Look at the short volumes just ripping higher. So we're recognize part of the context here that we're coming up on. We're coming up on the month-end time frame, and we have short volumes as an example here with healthcare just really moving higher. What's my takeaway? Well, I was looking at MRK as a possible example for a trade this afternoon. Let me show you what this looks like. So I'll look at my charts here. Find MRK. You can see it's down 1.2%. And I'll kind of just walk through what the process is when I'm thinking about a potential trade. So MRK down 1.2%. How does that relate to its normal volatility? Here's MRK. It's normally 1.9%. So it's down more than half of its volatility. It gives us a potential good entry point. And I'll kind of walk through some of the other areas that I'm thinking about here as I look at a potential trade. You can see short volumes are low. That's good news. Shares have been coming under a little bit of pressure. Might be starting to get a little bit of month-end positioning where we might be getting some profit taking in the space. So I would have to, think twice potentially about getting into that trade. And partially it's because of what I just showed you with what's happening in the big players in the market. And once again, from a healthcare perspective, there's the short volumes that are shooting higher. I know there was a couple of other comments out there. Individual sector supply demand. And what I'll also do when I'm looking at names, and the financials are a great example today. I mentioned it in my note this morning that a lot of our momentum names were financials, but also the financials have been on a really steep run. Let's take a look at Upstart as an example of this. So Upstart in our momentum portfolio today, we look at the characteristics, what's happening for it. Well, it's been pegged at 10 for a really long time. It tells us that there's been really strong demand for Upstart. Short volumes a little bit above trend. Immediately, that stands out a little bit for me. And what I'd like to do in terms of a basic exercise, I look for anything going on in terms of, let's call it news in the name. So I pulled this up earlier. This is kind of my favorite for just looking at for potential news. You can see the market's coming under a lot of pressure right now, much higher earlier during the day. It has certainly faded. So you look at Upstart, it's down 9%, coming under a lot of pressure. You look at what some of the peers are doing. Carvana's down 6%. So immediately we know that there's pressure in the space. And I'd like to take a look at sector and industry trading. This is just something that I found on Fidelity. It's just a free service. What I'm looking for is what's been happening in the space recently. So you click on that, and it's a financials name, and it's also consumer finance. So what's been happening recently? Well, the financials have just been ripping higher, right? Consumer finance, not as much. They haven't been participating to the same degree. In fact, they've been down pretty heavily the last 5 days, and the whole sector and industry are under pressure today. I would probably have difficulty probably buying Upstart today, partially because of pressure in the space, and partially as well because of those short volumes that are above trend. So a couple of examples there. One, looking at, what's happening from a big picture perspective in the sector, and what hints might that give us in terms of where the sector might be going. And then, what's happening on a daily basis.
Hey, Brian.
Yes. Go ahead, Steve.
When you're talking about Upstart, you might also mention you need to look to see if there's been any kind of change in their rankings. Analyst came out early this morning, new analyst, Riley, and projected it, gave it a price of $10 less than what it is.
Correct. Yep.
So
That's great point, Steve. That's something I will generally try to do. My go-to is usually just what I showed you, but there's other places that I'll look as well. Google Finance, I'll look to see whether there's news in the name, what have you. Sometimes I'll go over to CNBC. Different sources. The bottom line is I'm trying not to trade blindly, right? I'm trying to have as many facts behind my trade as I can. And I'm generally looking for outliers. So in other words, if the sector's doing fine today, but some company's under pressure, well, that might be an outlier where I can pick up that name, try to trade part of that intraday volatility, and make 2, 3, 4%. But if I see news in the name, I'm generally going to stay away from it. That's just my personal preference. There's different ways to look at things, but I've certainly gone into trades before and then kind of got run over where that whole sector was starting to come under pressure. And sometimes when that happens, some of that pressure then can last, 2, 3, 4 days. It can be enough to, for you to have to get out of your position if you've hit a stop loss. How do I populate my Yahoo Finance? I just do that manually. Martin, it takes me, 2 or 3 minutes. So what I will do over time, and this is just something that I've gotten into a habit of doing, I will just, and it just helps me, especially in my job. I'll just take all the names down on a given day. You can see what this looks like. So here's the names for today. In our momentum portfolio, here's the names in low volatility. And it also helps me on a day over day basis. If I'm seeing a name that just keeps persisting, obviously that name is probably doing really well if it's in the momentum portfolio. So it's literally a 2 or 3 minute exercise for me just to bring them into Yahoo Finance. Doesn't take too long. Is there a way to import stock symbols into a portfolio itself? Bob, not to my knowledge right now, unless, and I will take a look at that and make sure that I'm not missing anything. But as far as I know right now, we don't have that capability. We're always looking at adding those capabilities over time as it makes sense, financially.
Hey, Brian?
Yep.
Is it possible in the dynamic portfolios to get the number of days in the portfolio?
Just jotting that question down, Barry.
I mean, because you're tracking it in a sense, so you're looking at it, holistically and just trying to go off of memory. But it would be cool if we had the option where we could select days, number of days in a portfolio. Like, the momentum,
yep.
Low volatility, and then I run a reverse momentum as well.
Yep.
And then can you describe how the long portfolio you're testing is different from the momentum portfolio?
It's looking at basically holding on to names until they start moving below that 9 threshold. So the momentum portfolio is looking at it every single day. The long portfolio is something that we're looking at, we're testing it, where you would actually hold on to those names until it no longer fits that, excuse me, until it no longer fits that criteria.
Okay, cool, interesting.
Yeah. And if you look at some of the momentum names over time, you'll see sometimes they're pegged at 10 for some of those names for 2-3 weeks. And if you go back and look at some of those names, there's going to be days where, they might be down 2%. but then they're going to be, swinging higher, 6, 7% the next day. Bottom line is there's so much momentum in that name that sometimes it can carry over, for a stretch of weeks at a time. And, what this test portfolio is trying to look at is capturing some of those gains, right? Capturing some of those gains. You can certainly go in and out on a daily basis, but what would it look like if you actually were able to hold some of those names, for a period of time until it no longer fit that criteria?
Cool.
How long do we normally wait if a trade is down its volatility for it to play out? I would say a couple of days. As long as everything remains the same. Let's say that you bought it for its demand characteristics and low short volumes. As long as low short volumes are not rising, above trend, and then you can continue to hold that. I tend to hold positions a shorter amount of time than Tim does. It's just a matter of preference. Each one of us has to have a way that that we sleep well at night, right? So for some of us that's shorter time frames, and some of us are comfortable, holding things for longer time frames. There's no perfect solution there, but I would say what you need to watch out for is just watch the data. If you're holding a name for a period of time, just look at it every day. Have the demand characteristics changed? Have the short volume characteristics changed? If they do start to change, and I'll give you an example from a couple of days ago, Aramark, that changed overnight. Well, it's time for me to get out of that position. That's just a real life example. I traded that a couple of days ago. It's time for me to make a move there. To your other question, do you set a stop loss? Generally, we recommend setting a stop loss around 1% or so. You can tweak that slightly, but one way that you could tweak it is perhaps let's say you enter into a position that's normally has intraday volatility of 6%. You enter in when it's down 5% on the day. Well, maybe you would want to set that stop loss, just a little bit below that 6% threshold. So, maybe you set at 1.5 or what have you. But, set tight stop losses. We're not in the business of losing money. We're going to have trades that don't work. I just told you one that did not work for me. The point is, you're looking at your setups. Was Aramark a positive setup when I bought it? Sure, it absolutely was. Do I regret that I didn't make money? Yeah, I hate losing money. But also, you set those tight stop losses, and then you're ready to, battle again the next day. All right, so Henry jumped in. Thank you, Henry. I appreciate that. Not currently a way to import symbols, but you can add them manually using the static portfolio builder. And then Martin came through with another comment here in terms of exporting portfolio data from Edge and then creating that custom watch list. Thank you, Martin. I appreciate that. All right, just trying to get to this question. Edge is weighting each of the 4 behaviors. That's correct. That's in terms of where we come up with the sentiment score itself. Not necessarily seeing what they have been buying, but just seeing the overall impact. So once again, think of it as that weighted index type of philosophy. And if we're looking at it on a 5-day over 5-day basis, maybe fast traders as 55% of recent trading, and we'll use Upstart because we've been talking about that. Perhaps they're going to contribute, $1 to pricing as we look ahead the next week. We're basically just doing exactly what the fast traders are doing. We're just looking at the impact over time and developing models accordingly. In fact, on the IR side of the business, the investor relations side of the business, when we look at our clients, we're able to come up with 5-day price charts for them, in terms of where pricing might go over the next 5 days. Generally speaking, that is within about 90%. So in other words, the models are really good. They have very good correlation, and that's where that sentiment score itself comes from. Supply side, very intuitive. So once again, demand, just think of it as that weighted index. Hopefully that makes sense.
So your
Andrew, I'd have to look. Go ahead, Barry.
So your models at IR within 90% predict a range for the next 5 days for a stock?
Yes.
Wow.
And that's part as we were doing the IR side of the business, we realized how good this modeling was and that supply and demand were very predictive. That's part of why Tim was able to start this business, because the models are that good.
Wow.
And some are higher, some are lower, but generally that correlation number is right around 90%.
What a great
average days, Andrew, in the long portfolio. I'm assuming you're talking about our momentum portfolios and our low volatility portfolios. A lot of times they will change every day because the characteristics for a given trading day might toss them out of that portfolio. So, over time, we're back testing those portfolios and looking for the very best possible names. Thank you, Henry, for jumping in. I appreciate that. Why does buying 99 shares feel faster than buying or selling 100 shares? It's just a function of the market itself. If you're staying under that 100 share threshold, it goes straight to market. So then the market makers are then forced to fill those orders, and then you don't get pennied on either side. In other words, you're not buying 80 shares and 15 shares and 3 shares and 2 shares and what have you. And there's less overall movement as you're placing that trade. Andrew, I don't know the answer in terms of that long portfolio. We're still in the matter of testing that. So as we have good data on that, I'll let you know. We'll circle back to you on that. Guys, we are coming up at the end of our 30 minutes. Is there anything else that I did not cover? Let me take you one other place here for a moment. I'll take you to the financials for a second. So I was looking at MasterCard as a possible play, and I'll take you once again through my thinking as I go through a trade. So I know what sector it is, but sometimes I don't know the industry. So MasterCard in our low volatility portfolio down 1.5%. Potential entry, right? It's down more than its normal volatility. It's in the financials, which we know is under a little bit of pressure today, and it's also in financial services. So everything's under pressure right now. Coming up at the end of the day, what's my thought process as I walk through, whether I want to place that trade or not. This is part of what I wrote about the financials today and why I hesitated, or I put a disclaimer out there in today's note. The pink is the financials during the last month. Just been on an incredible run, even more so than the other 3 indexes. So once again, recognize what has been happening and what can potentially happen. What do I mean by what can potentially happen? We're coming up on the month-end time frame, and recognize that at month-end, we'll sometimes have what's called window dressing from active investors. That's where they're making their portfolios look as good as possible at the end of the month. Perhaps more important than window dressing, though, is potentially what passive investors will do at month end. Okay, think about the implications here for a second, just with the financials as an example. 9% appreciation, and that was basically coming through the beginning part of expirations a few days ago. Coming up on month end, if you have 9% appreciation in a passive model, what can that potentially do to that model? Well, you can be overweight. So for example, if the financials were, and I'm just going to make up this number, if they were 10% in a given model, suddenly you come up at month end And when the managers look at those models, remember, they're trying to adhere to the mandates that those models have stipulated. You come up at month end, which is a standard time frame for true ups. Instead of 10%, you're suddenly at 12%. What's going to happen? Well, unless that model changes, which is unlikely, you're probably going to come under some pressure. So the point here, and we try to keep you updated on it, is, recognize the context and recognize what can potentially happen then as a result of that context. Context right now, we had GDP numbers today. We wrote about that today. Beware of fast trading activity. Well, what happened this morning? The machines ripped the market higher, but we were aware as we looked in the background here, once again going back to broad market sentiment, that we're at a potential, let's call it, tipping point. I don't expect the market to lose 5% in one day, but you can see demand is starting to slip and short volumes are rising above trend. That's not a great environment for posting gains in the short run, especially when we're coming up on that month-end time frame. So hopefully that makes sense. And David, thank you. Appreciate that. The next couple of weeks, please be aware of the potential for earnings. That risk is always out there, and we don't want to walk in front of a potentially poor earnings report. Well, I have taken you guys over time. I think I addressed all the questions. Thank you guys for your questions. I really appreciate it. Hopefully today's session was helpful, and I just wish you all just a wonderful day and wonderful weekend, and we'll catch up next week.